There you go.
Um,
Good morning, Dave.
Good morning, James. How
How
you
are you?
doing? I'm good. I'm good. Just a little rainy day here in Houston, but all good.
Gotcha. All right, so Dave, tell us about yourself. Tell us what you do for us in self-storage, and let's have a conversation about what Dave does for us.
Sure, be happy to. So I've been a real estate agent, a broker here at Marcus and Millichap for about 15 years. We started in July of 2010, so coming right at 15 years. I sell exclusively, focus on self-storage. I'm a self-storage specialist and have brokered um, hundreds of transactions for self-storage over the last 15 years. I don't know, $1 billion plus, I'm sure. Um, and just, yeah, I mean, try to stay on the market and top of the market. And that's basically it. I'm sure it's nothing too earth-shattering. So,
No, but believe it or not, it is because not the people that are buying and the people that are getting into storage, they don't always know the first thing about storage. And what I like to bring to people is people that know about storage and the ins and outs. And Steve and I were talking before you got on, and like we were talking about, I put an LOI out on a property, actually out in Rosenberg. Um, so I was helping this guy out that looks like me, the John Manus guy, and put an LOI out on the property for him. And they came back and were like, you know, hey, I'm sorry, but we're too far off. Thanks a lot. We'll let you know if it changes. So like a lot of people don't, you know, they don't realize that, how it works from even from a broker side. Like what are you guys seeing when you go to, somebody says, hey, I want to sell my property, Dave, what can you do for me, right? So
sure.
I mean, even from the beginning to simplify it for some of the newbies, and then we'll talk more complicated stuff as it goes along. So, like, what
Yeah,
happens when
well, I
it
mean,
comes along?
just from that, I don't know if I'm exactly answering your question, but you know, if I were making an offer on a property, I'd want to be as transparent as possible so that the seller would have a good vibe about me. Know where I'm coming from. You want to give that seller the confidence that this is going to close, that they're not wasting their time by entertaining your offer. So um, now you may be far off, but I mean that's a different nuance. How do we get to where we need to get? And a lot of times it is just based on price, and there's nothing you can do about it. They want it more than you do, or whatever the case is. But at the same time, if you're providing the seller the confidence that the property is going, the transaction will close, you have a better chance of bridging that gap. I'll say that much.
So what happens like so let's say I bring you an offer and I say, Dave, this is the offer I have. What happens? I mean, I guess just like in residential real estate, you present that offer to them saying, "Hey, this is the offer that I've gotten. Whether it's even close or not close, or it's even starting a thumb wrestling match with them about, this is it always comes down to pricing and closing, right? Two things.
Mhm.
Can you close and is the price close enough, right? So.
Yeah. For the most part, I mean, there may be other things. Terms are important. Look, the Trek says you have to, submit all offers. Now, the seller may put something in writing specifically stating like, "Don't send me anything less than whatever." But rarely does that really happen. I mean, the sellers want to see the market. They want to know that you're working for them, and you need to show them that you're doing your job, obviously. But
Right.
so let's just say, yeah, you send an offer, and I mean, I think the important thing that, from my perspective, is certainty of close, right? So, like you talked about, and okay, we're a little ways off, but here's what somebody's saying, and but they want to know, or I want them to know, like how qualified this buyer is. Like, is this a waste of time? Does this person really know what they're doing? And I remember I have 15 years of transactional experience, so I know what these buyers are all about. And like, hey, Mr. or Mrs. Seller, I mean, this person is closed. 10 times out of 10, and they've never missed a deadline, and they've paid a good price, and they're fun to work with, whatever the case might be. Or the opposite. This
Right.
person has never closed. They've submitted
Right.
10 LOIs and gone under contract 3 times, and they've never closed. And so, like, and there may be a real good reason why.
So,
Uh,
so like a voice of reason.
sure.
Like,
Well, it's just like, hey, I'm basing everything in fact,
right.
as much as possible anyway. I mean, but like, hey, this person's equity source is Bill Gates. This person's equity source is a hope and a prayer, right? I
Yeah,
mean, like,
yeah,
it's
yeah.
if you put yourself in the seller's shoes when you're making an offer, or not even when you're making an offer, but just if you were just looking at it from the outside looking in, you'd be like, why would I want to go with this potential buyer? It's pretty common sense, I think, but
Sure.
my job is just making sure that the seller is comfortable, and I want to be comfortable. I want to know that if we're going to spend the next 30, 45, 60 days, whatever it is with this buyer, that we're going to get to the finish line. So I'm asking a bunch of difficult questions. I mean, until I'm like, if it was your brother, I pretty much know where we closed. I don't know how many deals we closed, but I certainly had plenty of ammunition to say, look, out of the XYZ deals we've done over the last 2 or 3 years, he's closed on this many of them. And I could have a candid conversation with the seller about the buyer. So,
Right.
but that's the whole point of the exercise, is
Sure.
getting to that certainty of close.
Sure. So what have you seen? So for 15 years, I mean, obviously you've seen the market go up and go down and be in different areas of it. And I've only been like, so I've been about 5 years into doing this, and I've already seen the change in some, in prices and
It's been an active 5 years.
yeah, yeah.
You've
Yeah, and it's
seen
funny
a
because
lot.
yeah, because getting when I was getting my feet wet at the beginning of the 5 years, you figured 20 well, let's call it 2019. So in 20 right before COVID, I was getting my feet wet and everything, and I was just bird dogging and looking at properties and learning what's out there, and just the basics of self storage at the time, and then bam, 2020 came, everybody had a difficult time. 2021 came and it just blew up, right? And the market was doing well. And then, things have changed obviously over the last couple of years. What do you think? I'm not going to ask you your predictions, but what do you think the market looks like in the next 2 to 5 years? Like, you got? I know you got your fingers crossed, and we all do, but
Well, I
uh,
mean, it's, I mean, I don't know, it's not even fingers crossed. I mean, it's just, this is what it is. Like, there's ebbs and flows. I mean, I got into it in 2010, so coming out of the downturn, but still in a pretty precarious environment. It was a tough lending environment. There wasn't a lot of transactional activity, especially in self storage. Self storage kind of came into its own over the last, fortunately for me, about the last 15 years. It's really come into its
right,
own. But
right,
once things sort of once we got past the downturn of the financial crisis of '08 and so forth, um, there was a long runway, from the end of 12, 13, but certainly by 14, interest rates were, you could probably get a loan somewhere in the low 5%, high 4% on like, I remember Robbie Dunn, John's partner, well, this is before they were partners, but we were looking at a deal back in 2013, and he was getting, the rate was in the 4%, like 4.75, whatever. But
right,
in 2010, it had been about, maybe 6.25. So, it was quite a bit higher, and it slowly started to come down by, within a few years. And so you could get deals done in that case now, or in that range. And we had a long ramp where we saw that. And then, as you mentioned, 21 and 22 were, as I coined it, the steroid era real estate brokerage, certainly
Right.
self-storage brokerage,
Right.
just self-storage operations, self-storage everything, just
Yeah.
things were just absolutely, um, they don't call it a perfect storm for nothing. So
Yeah.
it was just a confluence or whatever you want to call it of events that all happened at once. So anyway, to your question about what I see, we've seen the last 3 years now how things have cooled off with the rates, and you're talking about keeping your fingers crossed, and I mean I do figure that rates are likely to come down, but I don't know that they may never come down to 21 and 22 levels. I mean that, as I said, it was a perfect storm for a reason. So that's hard to duplicate, and for the greater good, we may not want that because it was predicated off of a pandemic. So I don't
Sure.
know that that's a worthwhile trade-off.
Sure.
But the point is, we had a good run up from. Um, geez, sorry, my it was freaking out. Anyway, um, sorry. Um, anyway, going back to it. Um, we had this long run up where interest rates were pretty stable. And so I think the certainty, as much as anything, is what's gonna you know, influence the market, hopefully give us some clarity in the world, just make the you know, make the market. Um, so I don't know if we necessarily need interest rates to go down to 2% to make that happen. You talk about the fingers crossed. I don't know if we need some drastic, dramatic interest rate drop to see people start doing deals as much as hey, this is where it's going to be. So hopefully it goes down a little bit to where people are making comfortable moves, and you do feel for people that are buying like, hey, we're going to get the interest rate's going to be 3.5%, and so they're buying four caps or 4.5 caps, and then lo and behold, it becomes a 6.5, 7 cap market, whatever, and they're absolutely stuck, basing on pro formas that just are never going to come to fruition. So I do wonder, like, what lessons have been learned in the last 3 years, based on the 22. Like, we sit there and think, oh, yeah, all we need is interest rates to go down and everybody's going to start buying deals again like drunken sailors. But will they? Because there's a lot of people that, hey, man, we've got a good spread. We're accretive day one. And then 2 years later, they're not. And
Yeah,
they're
they
going to
go to
basically,
refi. They go to refi to get out of that balloon that they have, and
sure,
now it's 7%, and they're stuck.
that's right.
You
That's
know,
right.
or they lose the property even for that matter.
Yeah, I
Um,
mean, I'm seeing a little bit of that, slowly.
yeah. So what do you see as coming in as far as people selling? Like who are they the boomers coming in selling? Are they a mix of everything? Like right now,
I mean,
who's
there's always some of that. There's always the people that are, the death, the disease, the divorce, whatever, right? I mean, there's always going to be that segment of the market. What we don't have right now is the price motivated segment of the market that's, only going to sell at a 5 cap or whatever some dream cap rate is, right?
yeah.
So you don't have that, and I don't know when that will come back. I mean, maybe it will come back in a couple of years, or maybe things are just stable for a while. I don't know. But it, I am seeing some people that are, I've gotten books and records from groups that entered the market 5, 6 years ago, kind of about the same time you did, as things were coming to a crescendo. We had that long run up, as I talked about. So I'm seeing a lot of people, sending me numbers that, oof, this hasn't really been what we hoped for. This isn't what we expected. When John and Robbie started doing it was 2016, and there was plenty of runway at that point. But now, people coming in that maybe came in at the tail end of that, that thought they were gonna, maybe, hey, we're gonna disrupt the market with remote management, or we're gonna have this that's gonna be an efficiency, and we're gonna be able to make a lot, and we're gonna do better, and we're gonna sell it for some great, they're finding out, like you mentioned, balloons and different things that are happening, that they're not in as good of a position as they expected, that storage wasn't as easy as they thought it was going to be. And so, yeah, I mean, it's time to refinance. It's been 4 or 5 years since they purchased, and they're seriously weighing their options. And so I am seeing, some of that uh, come to fruition. I'd have to sit here and think about like deal by deal, and it would probably not be good video.
Yeah, no, I
But
got you.
I
But do you
I
think
have like go ahead. Oh, sorry. I was
do
just
you
gonna say I
think
have 10 deals under contract right now, and just closed one last week. And we could go deal by deal. Why is this person selling? Like, and there's probably not, I don't know if there's one pattern or anything like that. It's just different people in different places.
um do you think that there, with these balloons happening, and people getting out of, maybe even getting out of the business because they went through that whole rough patch of not expecting it to be the way it was, do you think there's good deals to be had in that situation because they're they're like, I'm done, I'm getting out, I just want to get rid of it so that it's no longer a liability for that matter.
Sure. I mean, I've got I invested in a deal that was a 7% cap rate with a mom and pop owner and plenty of room for, I mean, I just as a limited partner, right? I mean, but
Sure, sure.
somebody mentioned it. I was like, wow, that sounds like a pretty good deal.
Right,
I have a property under contract that maybe a 9 cap. Now these aren't in downtown Dallas or downtown Houston or
right.
core markets. These are
Sure.
out there,
Yeah,
in some rural markets. But
yeah.
people need storage out there too. There's no barriers to entry out there. So somebody could certainly build on top of them. But
Right,
if you look at it, like most of the people that are getting into storage, most of the people that are interested in storage aren't wanting to go to these places. So there's not a lot of, uh, supply risk in some of these quote unquote less desirable, non-top 50 MSAs or whatever the case might be. But to your question, I do think that there are some good opportunities out there. And, I saw a deal, I've seen a few deals go back to the bank with some, they're done pretending, they're done extending.
yeah,
There's like, somebody will get us out of this. There's enough equity where we're out clean. The covenants have been broken on that loan. We're we're moving on, right? So
yeah,
they're losing. I think the lenders are losing some patience that maybe they may have had 12 months, 24 months ago. Um, so yeah, I think you will see some more, but I mean, look, there's a market out there. Everybody wants storage and it's expensive. It's an expensive asset class to own. And what I mean by that is that the spreads just aren't as wide as some other classes that may, like maybe a multi-tenant shopping center with, less than AAA credit or corporate tenants or, like they're so risky. You have a five, I'm not telling you anything you don't know, but you have a 5 tenant center and one person moves out or two people move out and all of a sudden you're at 60%. Well, typically we don't see that in storage and there's a price to be paid for that stability. So
yeah.
people aren't, they don't want to, they want to make money. Here's a funny idea. They actually want to make money with their real estate
Right,
investments, but at the
right,
same time, they're willing to make less money to have the stability that a self-storage investment provides. So the deals, they may not be, yeah, you can make some money. Like you may find something at a bank, or you may find something that looks, pretty good, and hey, I do okay. But there's likely going to be competition for it, which will compress that spread somewhat. So,
right,
just finding an out and out steal, hey, they're still out there. My job is to make sure they're not out there, right? I'm trying to get sellers the most money and the best terms and so forth. So
sure.
trying to make sure there aren't steals, but hey, there's always something out there.
Yeah. And like you said, out in the tertiary markets where, you don't have that cost of entry per se, people could just, hey, I got 10 acres. I'm just going to throw up a self-storage facility. And next thing you know, that's your biggest competition right down the road, and it could sink you,
No
where,
question.
yeah.
I mean,
Um,
that is, it's just yeah, very. And I say unsophisticated or whatever, but yeah, I'm gonna build me some storage. I got,
right.
that right. So,
Yeah. Yeah.
um, and when things are going great, I'm sure the attraction of doing that, is pretty compelling. So,
Yeah. Um, there's something I was going to ask you too. Are you seeing like with the deals that you're closing on now or you have under contract now, is it in the big cities? Is it secondary markets? Like what are you working on right now as far as what's going on?
Sure. Well, so most of them are in bigger cities. Just suburban. Oh, I'm just going to read suburban Austin, suburban Houston, West Texas, suburban Houston, Oklahoma, suburban Houston. Like, just so basically, those are, under contract, not core like inside the loop class A, but most of the stuff I'm have under contract or just in the nice suburbs. Don't get me wrong, it's nice stuff by and large. But and the buyers, while it's you know the buying pool is regional buyers, um, by and large regional buyers. Maybe they have three or four or five. Um, but I'm dealing with one of the deals is with a REIT, and another one is with some private equity. And the private equity is certainly out there making offers. But I guess if I had to put it in a nutshell, a lot of what I'm doing right now is with more like not the biggest of buyers, but quality buyers, but not institutional level. And it's not in like by and large, not in inner loop class A type locations.
Right. Okay. So you've been doing it for 15 years. Have you seen the same properties change hands?
Um, well, I I just sold one last week. I closed on one last week that I sold in 2021 or 22 rather. So there was a 3-year hold for them. I have one on the market that I've sold twice before. Um, but those are somewhat outliers. I guess the to your question, typically you're selling to private equity or you're selling to the REITs. You're trying to, some of this nicer stuff that the lower cost of capital buyers are going to take and they're going to hold for a long time.
Mhm.
Um, we have a group in Texas that focuses on smaller deals. There's a guy in the Dallas office that'll just do 20,000 foot deals. That's his primary focus. And those kind of properties will come back. I couldn't tell you like how many like class A type deals are in my database that were inside the Beltway or inside, 635 or a nice suburb of Dallas or a nice suburb of Austin, San Antonio that are long gone. Like, I mean, I had hundreds of them years ago, and now it's down to like, I mean, if you counted the properties that are individually owned and like a one-off owner inside Beltway 8 in Houston or something like that, inside, you know, uh, the urban core of Austin, just far, few and far between, right? So those properties don't come back on the market. I actually am looking at a property for a REIT. But there's very rarely do the REITs sell and they may not sell. But, I do have numbers from one REIT on one property in a big city. So, but that's not an indicator of the market by any stretch. I mean, if they have,
Right.
thousands of properties and they decide to sell one that doesn't fit their basket anymore, that doesn't mean that the REITs are in a sell mode now, right? So,
Right, right, right.
um, so yeah, you're just not going to see those properties come back, but you will see a boat storage come back. You will see a 15,000 foot property or a 25, something smaller that's not maybe not investment grade. Those come back from time to time. And, a lot of people, if you're looking for something for the first time and you're willing to roll up your sleeves and you buy it right, like, you know, you could do something with that. It's just when people sit there and think that they're going to take the prevailing cap rate is 6% on, assets in, this suburb of San Antonio, and they go and buy a 10,000 foot property and think that they're going to get a 6% cap rate when they sell it. I mean, they could be in for a rude awakening. You know, that may be a 150 or more, depending on the quality. You know, if a class A and a class C or some non-investment grade, it could be far greater. The spread could be, 200, 300 basis points higher than something good in a good city. So you've got to be mindful that of that. Um, so yeah, so sometimes they do come back, but most of the stuff we sell is, investment grade and goes to the private equity and does not see the light of day for many years.
Right. So when somebody comes, you send out your marketing information on a property and everything. Give us some advice on how we should come back to you and approach you with questions or
Sure.
with information that we need from you or even to give you an LOI on something.
Yeah. Well, I think, it'd be nice that people read the offering memorandum or, and like, and I know like I've had groups tell me, they're very sophisticated groups, Dave, just give me the silent reports, give me the P&L. I don't need your fluff. I don't need your offering memorandum, right? But it would be nice to at least have read the story, understand the deal, and yeah, understand the numbers thoroughly. And just, so that's helpful, right? Like, what can you tell me about this? Well, I just put together a 50-page booklet that tell you a lot about it. But if there's something that wasn't in there, like certainly, like, hey, does that property have a residence for the manager or whatever? Like, okay, no, we didn't put that in there, whatever, right? So, or maybe there's just a question, that, but you just like somebody to know. What I really like is when somebody knows more about the property than I do. Here I have put together a 50-page brochure on this 75,000 foot asset, and I know every inch of this asset. And somebody's going to come here and tell me, did you know that they're widening the road at that in front of there? Or did you know that HEB is coming in right across the street? Or did you know that somebody's building a new storage facility 200 yards away or whatever? Like, I should know that, but it's like, you really feel good about that. Like somebody's like, they really know this property. And you go back to the seller and say, like, of all the people I spoke to, this person knew more about this asset and I feel like has their eyes wide open to what they're getting into for the next 30 to 60 days. So like when you're asking me on the front end, it'd be great to have that feeling about somebody. When a REIT makes an offer on a property, you feel like they have a lot of data. They know the supply, they know the rates. They probably have 5 properties within 10 miles of that asset. They
Right.
know how that market operates. They know why they want to be there. They probably secret shop that property 10 times over the last decade, whatever it is, right? They know what they're getting into. And yeah, the fact that they have the cash in the bank ready to do the deal helps their timeline, which makes us all feel good too. But I think just as important is you just feel like it's gonna close. Like I got at the very beginning what we were talking about. You have a good feeling that they know as much about this as you do, and if they're putting an offer, they're gonna be able to stand behind that. Doesn't always happen. You know, we didn't realize that there was a foundation issue. We didn't realize that the manager was you know, somehow cooking the books, whatever may come up, right? I get it. The surprises kill deals sometimes,
Sure.
um, but by and large, you just want that person. If you're saying, hey, James, when you make an offer, I want you to know as much as I do about that property or more, hopefully, like you've gone out and done your homework.
That's good. That's good information to for people to know. Um, so you're seeing a lot of REIT activity, I'm assuming, in this market, or are you still seeing, people like me and my brother and we're doing one-offs over here and maybe a
Right.
portfolio over there, and but we haven't really we added to our portfolio of properties over the last year, almost a year and a half now. But it's only by a couple properties. So like we just added to what we already had in the area that we had stuff. But we're finding it hard to find nice Class B property that's even ran halfway decent to have the numbers to match the price. And of course we always do a quick number, looking at something and going, okay, this is how much they're making a month. This is what they should be doing a year, and this is what they're asking for it. And we can do a quick, survey of it. But we're seeing like it's been difficult for me to find a property to even start underwriting based off of some of the prices. I look at it, even just the quick P&L, and find out what they're making a month, and then knowing what our expenses would be, let's call it 40%, and then even put that pen to paper. So, what do you think of the different markets in, let's call them, even different classes of storage? So boat and RV, standard storage. Like, are you seeing more movement in boat and RV? Are you seeing more movement in traditional storage, Class A, Class B, Class C? It doesn't matter. I know you deal with more of I call them the nicer properties that I can't afford, but you also have people around you that deal with the other ones. So
And yeah, I mean, look, I'll get into whatever, it's all green at the end
money
of the
to be
day,
made,
right?
right?
So like, if but um anyway, I am seeing more and more boat and RV storage. There's no question. It is getting more popular. I'm not saying it's anywhere close to uh, you know being self-storage, but if you had one and now you have two, you're growing very fast, right? So
Right.
there, but I mean, I look at we typically have one or two boat and RV properties at any given time, uh, moving forward, whether we're doing an analysis or we have one under contract, have a listing, there's always a some. And I know you have boat and RV storage in your brand, Top Lock, self-storage,
Yeah.
Top Lock, boat and RV storage. So, I mean, I would think that maybe you can find something there that, most of the people still want the mini storage, and there's no question. There's just more institutional money out there for it, more private equity money by leaps and bounds. There's probably zero true REIT money available for boat and RV storage at the moment. So
Right.
that could change, but
Yeah.
it will change. But the mini storage is probably gonna be more competitive for you. Um, but like, I don't want to tell you how to run your business or the people that are watching this, but
Right.
maybe get a bigger box, right? Like get creative. Like, hey, people come to me, they go to these classes. Well, I need something that's this size and in this market and has this much land for expansion, and it's currently this between 68 and 72% occupied, or whatever they were taught at a class. And
Yeah.
certainly the people that are teaching these courses, they've been successful and they understand, they know what they're talking about. I'm not saying they're wrong, but like, hey, see what makes sense, like really dig in and say, is the market like, what can we pay? And, I it just, maybe make a little bigger box. That's all.
Yeah, I've noticed that too. I've expanded that, also location, for a boat and RV is key. Um,
Is it,
because
is it
obviously,
really?
well, it depends. The HOAs nowadays, it doesn't have to be key, because a lot of people can't park their RVs and boats at their homes.
Well,
So,
that's nothing new. But my point is, like, boat and RV rates have gone up. Rental rates on boat and RV storage have gone up, uh, 50%, call it, maybe. I mean, I'd say, yeah. I mean, at least 50% in the last 15 years since I've been doing that, right? I mean, I doubt that mini storage, self-storage rates across the board. Now, I don't mean that, people haven't seen their rates grow in time, but like what we saw in 21 and 22, where your $100 unit became a $200 unit all of a sudden, that's tapered back down. And it's still up, but not maybe as much. But the boat and RV has seen like meaningful, real gain over the years. And so, that's good, but it's still at 50, 60, 70 cents a foot, right? I mean, it's not at $1.50 or $2, right? So it's hard to make deals on a main road pencil for 50-cent rents. I mean, I have one deal on a boat and RV property on a main, like a very busy location. And it was weird because the land was completely messed up and it was cheap dirt, but you couldn't put anything on it. Next to a railroad, there's easements all over the place. You couldn't do anything but put a couple rows of boat storage on either side of it, right? So, okay, one time where I say one time, I mean, people do it,
Yeah, I
but
know. Yeah, I
it's
know.
just, it's just not feasible. If you have, that farmer we talk about that has 10 acres. Well, if you have 10 acres of land on a main road, you shouldn't put boat storage there or RV storage, right? I mean,
Right.
you
Yeah.
should put an apartment complex is, I mean, it's going to get you a
Right.
lot better rents, whatever. But anyway, point is that the you know the location. I mean, I joke about this all the time. I mean, real estate, we've been taught location, 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 and I'm not saying that location isn't important, but they didn't have the internet when whatever wise person said that statement back in whenever that was, right? I
Right.
mean,
Right.
they didn't have a phone where they say, oh, that's over there. I got to make for a mini storage, a self storage. I'm only going to go there once a month or once a year. I'm not driving by the boat and RV storage place. Now, I may like, oh, wow, there's one. I need to store. I'm getting a boat. I can see that for sure. But that is some of the way you get customers. But at the same time, I think these days people are looking on their phone saying, oh, I'm about to buy a boat. Where's a storage place? Right. So,
Mhm.
I think you can get by with a less than stellar location on some of this stuff. It,
Well,
look,
I
if
was saying
if
more
you're
along the
paying
lines.
a
I
if
was
you're
saying
paying
more
a
along the
six
lines
cent,
of like
what's that?
boats. You got to get, it helped that there's water nearby, right? So, if you're in the
Um,
middle of if you're in the middle of Oklahoma and there's no water around, you know,
it can, but at the same time, like people either want, you're right, they either want to store where they live or where they go boating or
right,
camping or whatever, where they
right,
play,
right,
where they live or where they play. Um, Most of the time, the best ones seem to be in these suburbs. You really couldn't do boat and RV storage. Like I go back to your price per foot. I mean, to go, hey, I want to have Memorial boat storage, right? Or River Oaks boat storage or Highland Park boat storage. Or I mean, like, how are you? Yeah, I want to get this piece of dirt on the Central Expressway and I'm going to put 10 acres. I'm just going to tear down a movie theater or a strip center. Like, no, I mean, so you're going to have to go out. The suburbs seem to have the best mix of reasonable land and having people. I mean, you can go out to the country and find cheap dirt all day. And yes, somebody will go for a discount and they'll go out there to, I don't know, 30 minutes out of town to go store their boat. But typically they want it right there where, after a busy weekend, the last thing they want to do is they're exhausted, right? I mean, they've just spent the last 2 hours getting their camper, put back together and ready for the road. And now they have to stop and they've been having a good time all weekend and they're just looking to have a few hours before they go back to work on Monday. So to go 30 minutes out of town to go back to their suburban house is like, no,
yeah,
especially if they went camping 30 minutes the other way or an hour the other
right,
direction, right? So,
right, yeah,
yeah, I mean, the suburbs are definitely the most realistic, popular spot to do some of that stuff.
yeah,
But
yeah,
I guess my point is, if you're saying, hey, I'm trying to get into a deal, nothing's making sense, and well, I need 50,000 car count, or I need 50,000 population, or whatever you need, and maybe you're like, that location's not perfect, but I bet the return could work. You're not going to pay uh, inner loop prices, core prices, um, but perhaps it could make sense. So I would just keep an open mind.
Yeah, I've seen a lot. I mean, we have a couple of properties that are spread out in South Carolina, and some of them that I didn't expect to do as well as they do. Um, they're doing they're doing well. I'm not saying great, and they're doing well compared to other ones that you'd think that they were be doing okay, and they're not, like and it's also comparing, like one state to a different state, and that's hard because the demographics and everything, it's completely different in the two, like Texas and South Carolina, the demographics where we have our properties are completely different. And we have this one little facility that's a hub and spoke off, and it's off this little country road on the way to Myrtle Beach. So like it's funny because that part of our facility is doing really well, but it's the only one there. Nobody else has anything there, right?
Right.
So that particular one, like if we wanted to expand that one, that would be the one we expanded because the one in the town, which is 20 minutes, 25 minutes away, but still in the middle of going to Myrtle Beach, the one in town where the people are, there's also competition.
Right, right.
So you know what I mean? Like,
Yeah, yeah, I do. And I guess I should clarify, like, look, I still want as an agent right on Main Street, right? I mean,
sure.
I want the 50,000 traffic count. I want the visibility just boom, right in front of your face. Right, no question. So it's a little contradictory what I'm saying, but to your point, your better location, the better performing location is the worst location.
Right.
The one that should be getting all the, the hype and making you all the money is actually the one that's struggling a little bit compared
Yeah.
to the worst location. So, and that's my point in all of this is that, you can make money with maybe a subpar location. Now, I'm not saying as a developer, that's a whole different set of
Yeah.
rules, but there's an existing facility. It's not at Main and Main, but I want to get into the storage and I can probably make this work, like to your point. Now,
Yeah.
when you go to sell it, you won't have as good of an appreciation as if you're in the town where all the
Sure.
people are and all the cars are passing by it. And, there's no question that location still
Yeah.
matters, no matter what. I mean, so I don't want to downplay that. I'm just saying that with mobile phones, you
Yeah.
you're struggling to find a deal, you want to do it, and there's a good return, and it's a better return than you can get elsewhere. It's just not perfect for what you're being taught. You may you may still consider it.
Right. Well, that's good. That's good stuff because I mean, I've met a lot of people that, they've taken those classes, and I'm learning, like I labeled myself on YouTube as the storage student because I'm learning all the time, and I've never sat down with a class. I actually thought about taking one just because I wanted to know what they were, what maybe they know that I don't know yet. And they probably do because I don't know everything. Um,
Oh, I'm
but
sure that I would learn something anybody. I mean,
yeah,
different viewpoints and like, wow, I never thought about that. I mean, the depth of real estate knowledge and the volume to real estate, even in self-storage, just one asset class is still,
yeah,
you know, huge. So,
yeah. And I talk to people in like multifamily, more along the lines of apartments, not necessarily single family multi, like duplexes and stuff, but apartments and stuff. And it's interesting to see their take on what they look at, and then our take from storage, and it's a good um how do you want to call it, like a good banter back and forth because the way that they look at stuff and the way that we look at stuff, is, I mean, it's similar. Obviously, we're all in it to make money, but it's very different on the operations side of it, and the, leasing up and the all that, like marketing even, it's so different, but it's definitely an asset class that I find very interesting. I've not delved into it yet, but I do like to talk to people about it because like you said, you learn something and you go, hey, we kind of do the same thing in storage, but we don't. Like there's it's terminology and stuff like that is different. But um, so let's talk Marcus and Millichap. You've been with them the whole time.
Yeah, the only thing I know about real estate is what I've learned in the four walls of Marcus and Millichap. That's right.
Okay. I mean, obviously, I mean, Marcus and Millichap's a big company. I mean, we have, they're all over the United States.
Yeah,
Um,
yeah.
I see signs all around over here in New Jersey even. Um, what's what about the people who are considering um brokering and stuff like that? What do you have anything you want to talk to them about, or these off-market people that are doing these I guess kind of brokering deals that aren't really brokering them. Like I see that a lot with people that are flooding my inbox that I know they're not brokers, but yet they're brokering deals somehow or another, or they're selling off market deals. What's your thoughts on all that?
Well, for the your first question, it's a terrible job. Go into something else. Like, no, it's I mean, people wanting to get into self-storage brokerage. I mean, look, it's pretty competitive. Like don't kid yourself. It's may not be as there may not be as many retail or self-storage brokers as there are retail brokers out there, but there's also quite a few less properties than there are shopping centers out there too. So
Sure.
the pie starts to get cut pretty thin. But if you work hard and set yourself apart in real and forget about self-storage, just in any level of brokerage. I mean, you can. It's not like it's impossible. I mean, you talk about Marcus and Millichap, and I can't tell you the amount of people that come in and don't make it, and it's unfortunate because they seem like they've got a good head on their shoulders, or they're going to make it, or they said the right things in the interview, whatever, and yet they invariably just don't. To that point, I think that I see people that went to, major universities, and I see people that went to, didn't, I don't know about, didn't go to college, or didn't finish college, whatever. Like, it takes all kinds to be successful. There's so many different kinds of skill sets that can be a success. I would think that if the message to somebody wanting to get into brokerage would be, if are willing to work hard. I know you don't really know what that means until you get into it.
Sure.
Because, yeah, I'm willing to work hard. I mowed lawns all summer long. And, I worked at a car wash and in 100-degree heat. I'm a hard worker. I get that. But um, when the car is laying on top of you, are you still working hard, to push
Right,
that thing
right,
off you? Right. I mean, like,
right.
anyway, it's just but there, if you're willing to work hard and you're coachable, people can, they can thrive in brokerage, but it is difficult and it's extremely competitive. As far as people, you know, uh, I guess contracting out properties, whatever you want to call it, just
Yeah.
brokering, hey, more power to them. I rarely see a good, it's always like, these 5,000-foot properties that, oh man, you can convert the apartment into a climate control unit and improve your cap rate by 25 basis points, and you can raise the rents 10%, and it's going to be a great it's never going to be like institutional grade. It's never going to be investment quality or whatever, right? So most of the stuff I see is like that. I've seen a few guys get a hold of some deals and try and wholesale them. But I don't know. I think there are so many good brokers doing a good job that they're getting out there and letting owners know. I mean, we create a market. It's what we do, right?
Yeah.
So there are so many brokers out there that are creating that market that it makes it more difficult for somebody that's trying to get over, like, hey, I'm going to go buy this for 5 and I'm going to flip it for 10. And I mean, it's a difficult proposition. I'm not saying it doesn't work, and
Yeah.
maybe there is a great deal, and not everything goes through these big e blasts and things of that nature. I get it, but I typically don't see good quality stuff that, um, crosses my desk with stuff like that. So
Yeah, they like to inundate you too. They like I don't know how many like emails I delete just based off of now and have sent right to junk mail knowing who they are because of the wholesale of, they purchased a property, they're trying to flip it over and sell it to you. And the first couple times you're like, "Oh, what's this?" And then after that you're like, "Oh, this guy again
yeah.
and this guy again or this lady or whatever." Right?
And look, I mean, I I'm a broker, and yeah, it hurts me, I guess theoretically, but I've never taken that tact. It's like, good for you. You're lucky. Get it however you can get it. That's on me. I didn't connect with that seller and get their property on the market and make them more money theoretically. But at the same time, I'm pricing things what I think the market is going to react to. So I hear people, we only buy off market deals. Is this off market? And I understand it sounds good if you're a syndicator and you're telling your investors, we found this deal off market. Like, oh, there's this shroud of mystery, like, oh, we're the only people that saw it and it's a great deal. And it may be.
Right.
But at the same time, that doesn't mean that there aren't good properties available that are out there that thousand people see. I mean, they
Right.
can still be good opportunities. You like it, it fits for you, and you can make a good return. You may not hit the grand slam of grand slams, but you can still have a good investment, a good solid investment that'll appreciate and provide tax advantages and all the great things that investing in real estate can do for you. So I wouldn't be afraid of you know, buying deals just because they're listed.
Yeah. I mean, technically, I bought a property. The boat and RV place I bought was technically off market. There was
It
so
had been
much.
on market, I believe.
What's that?
Had it been on market or
Yeah, it was, and then it came off. And the problem with the property that we bought was everything was handwritten.
right, right.
There was a lot of cash being stolen. There was a lot of debt,
It's
like past due rents. Um,
it's
and
tough for a lender to get involved with that. It's tough for a sponsor to go to their investors in good faith and say, hey, the property's, well, how's it doing? Well, I mean, I think it's doing this. And, that's a little easier than a lender. I mean, those are
right,
the best kind, really. But
sure.
if you're paying, you know, the same price for the chief tablet as you're paying for the Excel spreadsheet, you better be sure there's some upside there.
Yeah, some meat on the bone.
Being a little
So
risky.
now I bought it through a brokerage, obviously, but they brought it to me and said, "Look, this is one of the shittiest deals we have, and we saw what you did with one of the other properties they bought that was a shitty deal, and they said, hey, why don't you take this one on and I said, well, the only way I can do that, obviously, is if I get seller finance because the bank's going to look at your mismatched paperwork and laugh me out the door. So now we're into it 10 months, 11 months, 10 months into it. And now we have everything on the books in a, where I can pull a P&L and I can show a bank, look, this is where we were and this is where we're heading. So with a 3-year finance with seller finance, I'm able to now have something on paper that I can go back to the bank and give them true numbers and get money from the bank to refinance when it comes time to when my balloon is up from the seller.
Right.
Um,
What
and
that took though, James? That took work.
yeah, it did.
And it's not, I know this is supposed to be passive and you plug in a management company or whatever, and you're not, but you actually had to work. And
Mhm.
so you may have taken the same return as somebody else who didn't have to work. And
Right.
hopefully, down the road, you'll get paid back when there's the upside that you'll take advantage of
Sure.
getting it going. But that took a lot of effort to do that. And
Yeah.
a lot of people don't want to do that. And
Yeah.
not only that, they can't do it. A lot of people that are watching this may have full-time jobs and they don't have the unlimited energy and time to do what you did. I'm not saying
Right.
that you have unlimited energy and time,
No,
but
no, no. I know what you're saying. Yeah, I
I mean,
agree.
but
I
yeah, it's
agree.
like, but eh, so there's a trade-off for that. But yes, I mean, okay, the deal was on the market. It came off because it was too hairy. You figured out a way to get around it. We're willing to roll up your sleeves and do it. And now you're poised to, reap the fruits of your labor or whatever, that
Yeah, it's sometimes it's not a get rich quick scheme. That's for
it's not.
sure. It's definitely it's a definitely a hold property that as time goes, the value goes up. The better our occupancy is, and the more money we're making a month, et cetera, et cetera, et cetera. It's going to be worth it on the exit part. In the meantime, it's still, I'd have a full head of hair when I started and be bald by 10 months in, pulling it out. But some people don't want to do the work or have the headache and make those decisions and or even know how. And trust me, I don't have all the answers, but learning as I go and I'm getting to the point now where I bought it at 48%. We're at 71% now occupancy. Am I where I need to be? No, I could use another another 10%. That would be fantastic. You know, um, but fortunately enough, I had some working capital in there that I could make the property stay afloat while I'm doing all this. And I say I'm doing it. I have a store suite helping me, but I'm making the big decisions. So, just getting the property from paper to computer was a huge jump, right? I mean, just so that I can show a bank, when the time comes that look, I have like legitimate, I have contracts, we're accepting, auto pay now, we're accepting checks and cash still, and we're depositing into the bank. But before it was like everything was cash. Some people had contracts, some people didn't. Oh, I let Bill have that unit over there because he's a friend of mine. And now that that's all cleared out, you know, and all the riffraff's gone, sure, we're up to 71% and we're not at 88%, but that 71% is paying, right? They're actually paying they're paying and every month they're paying, right? Whereas before I was at 48% and some of them were paying, some of them weren't, had $169,000 worth of past due rents, and we collected some of that. We bought that with the property. We collected some of that, and everybody was like, "Oh, 169,000, that's great. You could put that on the bank." We didn't collect 169,000. These people were most of them told us to go pound sand, you know? So, and that's what happens, right? Because, they were like, here's my chance now to run away, right? And not have to pay anymore. Um,
Right.
but I tell you, like you said, you have to work hard. Some people don't want to do it. Some people don't have the time.
They don't have
And
the belief either. You took a lot of risk, right? I
oh
mean,
yeah.
you're basically, yeah, okay. There's no way you believe that money was coming in. You knew it. They knew it wasn't. You knew it wasn't. And the people that are in your shoes, but you're expecting like, oh, it all laid out on a platter for you, and but deep down it's not gonna be.
Yeah. It's funny too because I spent a couple weeks down there over the summer last summer, and just meeting the people that were coming in and out and talking, helping the helping store suite with talking to the people as they came in and out and negotiating some money, that they were trying to collect and just everything. And I just noticed that like uh, it's it wasn't easy. Like it was exciting for me. Like I was just like, let's make this happen, and but that's also stuff that drives me is if it's boring, I'm not necessarily driven, right? So it's neat to see that some properties you can buy and everybody's expecting the cash flow when you first buy them, and that's not necessarily true, especially you can do all the underwriting you want, and as somebody once told me, our underwriting is a swag, right? A sophisticated wild ass guess, because we're expecting these numbers to be somewhat accurate when we buy it and then add our crack to it and make it come out to be something. So buying a property and being spot on with performance is never going to happen. Buying a property and being spot on with your underwriting is never going to happen. I mean, you can be close and you can be real far off. I mean, I just submitted that one LOI and I, used my underwriting model and I put everything in there that they gave me and I said, look, this is where we are. I'm thinking, hey, if I'm telling you where we are, this is where we are. Like if there's, we might be able to tweak some things and if there's best and final, let me know. And then they were like, nah, sorry, you're too far off. And I was just like, okay, well, you know, my numbers don't lie, and and I've used this model for 16 properties now, so it works. So
Well,
it's definitely
go find another one.
yep, that's it. Just keep looking, right?
Maybe somebody
Well, I
sees
appreciate
something that
listen,
you
I
don't.
appreciate you coming on.
Sure.
I'll post this out for everybody. How does somebody get a hold of you if they want to talk storage with you or put up a property or buy one?
Yeah, I mean, I wish I had a business card I could just put on the screen real quick.
Right.
But I mean, I guess
Just search Dave
not,
Knobler.
yeah, search Dave Knopfler. I mean,
Yeah.
email me or call me. Um, I don't know, like I could say the number, but
Yeah, I
sure.
know. I know. Then your
Seven one
phone will be
three
blowing
four
up.
five two 4293. Call me, but
There you go. There you
I don't
go.
expect anybody to remember that. But yeah, I mean, like what was it? The Indiana football coach said you can Google me or Google it or something like that. So
Yeah, well,
I'm
nowadays
on.
that's all it is. Just look me up on LinkedIn or look me up on Facebook or look me up on wherever. Just search my
Yeah,
name, right?
I don't know. I'm sure. But yeah, and I'd be happy to talk to anybody about if they're trying to get into it. Obviously, they want to sell a property. Happy to
Sure.
evaluate it for them, and enjoy talking to them. And I appreciate you having me on as well. So,
Sure. All right, I appreciate it, Dave. Thanks so much.
all right, James, have a good
All right,
one.
we'll see you. Bye-bye.